So the data for Friday, the highly anticipated PCE data, gave rise to opportunities all over the show, and a quick rendition of the euro. Now, it wasn't the ideal framework to be working within, given that it's extremely choppy. We've already had, ideally, what we would have wanted is to have been up high within the day's um, range. Now, heading into the data, we'd already come up into the Asian highs in the London session, and before the data, it was selling off. So it's a shame that it wasn't up high. Therefore, there was little room to maneuver within. With that being said, you would have been looking for a sell-off and a capitulation of the bulls and this low-hanging fruit below. Nevertheless, that didn't pay off, and instead, the first bounce opportunity came on the break of the structure. So we had this break using this indicator. You've got these lows here with all of that trap volume. All of this trap volume. So you've got the pump up into the highs of the day. So you've got this impulse correction into here. So you're drawing a trend line prior to the pump up. We've broken out of the trend, which is the best scenario for a short. Moving that out after the data hit. So you've got data coming in, some volatility in here. The break of this structure, you're drawing a trend line, so you're squeezed into this. You've got the break of structure, and then you're looking for your entry. So this M formation gave the entry. You've got the 45-minute rotation. So news has been released. This is the 15-minute candle. You've got this confirmation that the bears are moving in with the break of that structure. You're waiting for this trend line to come undone. Like that. So it has here, it's come undone. Connecting the majority of these candles best that we can. And we're looking for let's get the retest back up. We're looking for the engulfment. So now we had an M here, but we didn't get the engulfment of that retest to short. now we've got this other M here, pin. So we've had the M, the pin, and the blow off. So that's the same as a pin and engulfment. So that's fine. So you can take that entry. We're below structure. We've come up multiple times to test these highs. We're below the 20. And if we were to draw the Fibbo on this impulse to get our stop into a nice position, so we've got this confluence of the 20 and the 61.8 and the level below 70, stop above 70 rather. Um, you can just sell this at market. And the target was the lows of the prior day. Now this would either be taking some off, or however you want to play it. You've got 2.5 R on this trade. So you can take the majority off, take 50% off, take whatever you like. You can even say, well, look, I'm just going to go to break even at this point if you really think this is going to blow off. So some traders would have done that. Some would have just taken your profits and moved out. Again, this is not the best schematic because you're not selling up the day's highs. We haven't come up into that. So you want to be exiting. Um, you want to be exiting sooner than later. So we're now into this low hanging fruit. We've taken the longs out, and then there could be expectations of a continuation to the downside with 1760 light. That's the prior week's lows. But this, as you see, it just came straight back up. With the cash open. So that was either going to generate more flow to the downside or it was going to come back up. And it came back up. Now, gold was a much cleaner setup. Um, in this case, you see, we are up in the highs into the data, right? And we've got this trend line scaling up, whereas euro was already scaling down for the continuation. So this was a much cleaner setup. And if you're picking, choosing between your assets, you want to go for the one that's most favorable, obviously. So with this scenario, we had the news come out. We've got this pump, and this was the gap. So even on the far right, so the pump up and the dump. On the 1 minute chart, we had the break of this structure over here. The highs of the day were broken 50 minutes after the news. It's the first bounce trade. Um, So you've got the M, you've got the pin, you've got the bearish engulfment, so that's the entry below the structure, and the subsequent blow off to the downside. Now, depending on your rules for stop loss, you can have your stop loss above the 61.8 of the retracement, above the 20. You can move that down if you want to be above that prior pin, above the 20, still above the 50% retracement. You've got a nice 5-to-1 trade if you're targeting the London session highs. Um, and if you're being ambitious on the day, you could be trending the lows, targeting the lows or the lows of the day. So you would have had those lows. And you could be running this position for the lows of the day.